Hello and welcome to The Chart Show. I'm Victoria Scholar. Each week I'll be sharing my analysis on three key stories that are getting a lot of attention among investors, breaking them down not just from a fundamental perspective, but with technical analysis on the charts as well. This week is the last chart show of the year, so let's take a look back at three stocks which have been making some of the biggest moves in 2021. This week's three charts are Ashtead, which is the top performer this year on the FTSE 100, Polymetal, which has suffered heavy losses this year, and Moderna, which is among the best performing US stocks in 2021. In its latest results published in December, Ashtead reported a record performance and is now guiding for full year results to come in ahead of previous expectations, with rental revenue pushing higher during the global economic reopening post-2020. The company tends to perform roughly in line with the economy and as a result was a key beneficiary of this year's return to some kind of normality after the COVID slump last year. Ashtead has sharply outperformed the broader market, with shares up by more than 70% in 2021 compared to a gain of roughly 10% for the FTSE 100. In fact, the industrials equipment rental company has been the best performing stock on the FTSE 350 over the last decade, according to Refinitiv, with compound annual growth of over 40%. Let's take a look at the long-term chart. After an initial pullback in 2020, we can see this clear ascending trend line has been in play since the March 2020 lows, with higher highs and higher lows. Recently, we've seen a bit of a pullback amid concerns about Omicron, and as of yet, the upward trend line still remains intact. In terms of key levels, look out for support at 54.40, that's the October trough. A break below would create a lower low and potentially pave the way for a new trend. However, while price action remains above this level, the chart continues to look relatively bullish despite the near-term pullback. Polymetal has sharply underperformed in 2021. The precious metals miner is among the worst performers on the FTSE 100 this year. It's down by around 25%, dragged down by declines in the precious metals complex. Investors have been moving away from safe haven assets this year towards riskier investments such as tech stocks and Bitcoin as the global economy gathers pace amid the vaccination rollout. However, with growing concerns about Omicron, investors could be looking towards safe havens once again in 2022, with the potential to drive Polymetal higher, particularly if the inflationary backdrop spurs demand for inflation hedges such as gold. Let's take a look at the chart of Polymetal because we can see this clear descending trend line with lower lows and lower highs in place throughout all of this year. And it looks as though the stock is potentially on track to log a fresh low below the September trough at 12.24 to mark a continuation of the downtrend. Unfortunately, despite the near-term volatility in equity markets, we haven't seen a corresponding upswing in precious metals and precious metals miners. If we log a fresh low below 12.24, that could potentially spark further declines with a move down towards psychological round number support at 10. It will be the lowest level the stock has hit since March 2020, when it temporarily dropped below 12 before moving higher once again. Shares in Moderna have sharply outperformed the US market this year, gaining by around 150% compared to a gain of just 20% for the S&P 500. Having produced an effective COVID vaccine last year, which was approved in December of 2020, it's now managed to commercialize it this year with a successful rollout generating revenues of $5 billion in the third quarter, its latest results. That's sharply higher than sales of just $157 million in the same quarter last year. Earnings per share also came in positive for the third month in a row. Let's take a look now at the chart of Moderna because this is the second year of exceptional share price growth for the stock, in 2020 with the creation of the vaccine and this year with its rollout. Having said that, shares have pulled back significantly from the highs. The stock is down by more than 40% since the intraday peak in August. From the start of the year until August, the stock had gained more than 300%, and now the year-to-date gain stands at about half that. So, although we can still see an upward trend line, it looks as though near-term momentum is on the downside, with the potential for more losses ahead.